Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing where next for the Usdjpy, support and resistance areas explained. Thank you for joining this Forex Academy educational video. In this session, we will be looking at the daily chart of the US dollar-Japanese yen pair and looking at support and resistance lines. It's been a volatile few months for the US dollar-Japanese yen pair, with a high in February of 112.00 down to a low of a few weeks later in March of 101.16. Many investors will have been completely caught offside, and wins and losses for those who got it right and wrong will have been substantial. When analyzed on daily charts, adding simple support and resistance lines, we can see a clear pattern emerging of price action on where the exchange rate goes from peaks and troughs. The fall in the pair from position A to position B was down to the impact of the coronavirus, and where the Japanese yen is favored in times of such crisis due to its safe haven status. However, this huge move had become oversold, and of course it did so just above the key level of 101.00. We saw a rally back to position C, which incidentally is a step lower than position A. Typically, we find that institutional traders will pull out of huge upside momentum trades slightly before a previous high or a previous low if the situation was reversed, because they fear that in this situation the sellers are lurking at the previous high level. This is again proven correct when the pair pulls lower. We then see a period of consolidation between positions D, E, and F, and the subsequent lower step to G, where the pair only manages a following high position at H, again to find step lower with a previous high of position F. Now things become interesting because price action fades in a tight consolidation period, and at position 1 does not reach the previous high of position H, and collapses down to position I. Again, we have a shift lower to position J, and where we again see price not able to pull back to that resistance line at position 2, and price action begins to fade down to position K, which incidentally is a double bottom formation aligned with position I. These fading areas of price action which are unable to reach previous highs, as shown by positions 1 and 2, were very strong telltale signs that price action is about to move lower. Obviously the opposite applies, but with the Usdjpy pair we are looking for reasons to go short due to the overall fading trend and the nature of the yen being bought in times of uncertainty. With the market being extremely volatile right now and US elections only a few weeks away, we can reasonably expect a continuation in the strength of the Japanese yen and therefore more movement to the downside in this pair. Add these simple trend lines of resistance and support to your own charts, and look out for fading price action to see these lines such as described in position 1 and 2. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.